Hi, this is Alessio. Hope you're well. This will be a very important video. Many have been asking me for an update on what's going on here on the stock markets. As you can see here, this is the chart of Nasdaq. The Nasdaq here broke out above that trend line resistance, and now, just in the past week, it's come down below the trend line, exactly as we'd predicted and expected. And in fact, let me show you this is the chart of the S&P. The S&P also, after taking out that trend line resistance, has now declined and gone back below the trend line. So the question we're going to be asking is this breakout here a false break? And could this drop, the most recent drop here, be initial warning signs of a potential top? Or is something else going on here that perhaps we should prepare for? Okay, so that should be quite interesting. Also, I'm going to explain to you the significance of this chart you're seeing here with these red and blue arrows, and this chart, the volatility index, the fear index, what this is telling us. Then I'm going to go into this. These two charts, I think, hold a major clue for the next several weeks as we go from July, August to September and October. So I'll explain this in a few minutes. And also, I'm going to explain to you the significance of one key leading indicator for the stock market. All right, guys, so this should be quite an interesting video. Join me. Alright guys, welcome back. Now, as I said earlier, I think this will be a very important video. So before we dig in to a lot of charts I have here, in fact, I'm going to show you in a few moments what the significance of these two important charts are, and also this one over here, which I think is also very interesting. I want to first of all talk about what's happening here on the Nasdaq. You may remember, just about a few weeks ago, when the Nasdaq was here, I mentioned there's a lot of overbought conditions and overstretched conditions on the Nasdaq, and we could see the Nasdaq drop and fall below the trend line very soon. In fact, let me play for you a very short clip of my video. We'll come back. But I think in the next several weeks, we're going to see the Nasdaq below this trend line. The markets are extremely overbought and indeed overstretched and coming to a point of exhaustion. All right, guys, welcome back. So as I mentioned in the video, I was expecting the Nasdaq to drop below this trend line, and so far it has followed through with that, although we could see a bounce soon. Now, here's the chart of the S&P. The S&P also, as you can see, after the S&P broke out above that trend line resistance, as you can see, it broke it and then fallen back below it again. Now, last week in the member video, I warned that the risks are increasing of a potential pullback because of extreme overbought conditions, for example, on the RSI. Here's a very short clip. We'll come back. RSI, overbought condition. This is RSI 34 setting. In the past, usually when this occurs, we see some kind of a correction or pullback. Risks are significantly increasing. They're not going down. Risks are increasing, risk of a potential major drop in correction. All right, guys, so as you heard in the member video, because of the extreme overbought conditions, for example, with the RSI, we can see the S&P now has pulled back and is currently now just below the 21 EMA on the daily chart and is now resting just above that very steep yellow trend line support there. So far, so good. Now, of course, could we see a bit of a bounce at some point this week? Yeah, of course. But the bottom line is the markets have now pulled back to some nice levels of support. The other important chart I want to show you is this one. Before we go into that, let me just set the context. Just over the last several weeks, I've had a number of trolls and just ignorant comments in the last few weeks, just saying, hey, Alessio, look, you're missing out. Why aren't you getting in? You're missing out on this rally in the stock market. So this is what I want to talk about with you. By the way, notice that the S&P has pretty much erased most of the gains made in the last few weeks. The same thing also with the Nasdaq. The Nasdaq also has pretty much wiped out the gains it made just in the past few weeks since mid-June. Now, I want to show you this. Going back to 2023, I want to show you exactly when I was bullish and when I was bearish and also neutral on the stock markets, as shown to you by the blue arrows and the red arrows. So as I'm sure you can probably guess, the blue arrows show when I was bullish on the stock market on the S&P, and the red arrows show when I was bearish on the stock market. So as you can see here, let's just go back to February and January of 2023. So as I'm sure most of you know, if you've been following my member videos, I got extremely bullish on the stock market here at the beginning of 2023. When most people were calling for a crash, I was bullish here. And in fact, here's a screenshot of my members video where I mentioned what my higher probability targets were for the stock market. And as you can see here, one of my main targets that I showed over a year ago, 15 months ago, was at 47.48, just near the all-time highs. And the second was at 5,337. Let me just play for you a very short clip of my members video from 15 months ago, and we'll come back. There's a lot of data. There's a lot of data that suggests there's a high probability of a rally, of a 20% rally in the stock markets by the end of this year, potentially at least by December of this year. And also the wave counts, the technicals, all suggest we're likely to go in that direction. As long as the S&P stays above 3885, that's my perspective for a bullish rally towards this region,
4457 to 4311, and even to test 4750 for the wave 5 and all-time highs for a 20% rally by the end of this year.
All right, guys, welcome back. So as you saw in that video, I was calling for the market in February of 2023 to reach all-time highs. Now, as the market rallied off, so as you can see here, once the market pretty much rallied off here, in the summer of last year, in July, August of last year, I was calling for a correction because the market had become extremely overbought. And indeed, the market did see a nice correction here, as we can see. In October of last year, in October 2023, I got bearish on the stock market here because it broke support. Now, I realize I was wrong back then. Everybody's a genius in hindsight. But we should remember, just a couple of weeks later, I got neutral on the stock market. So I was no longer bearish. So I got neutral here, and in fact, just in December of last year, I got bullish again, as you can see from this blue arrow. So in November, December, I got bullish again, calling for higher targets. One major reason I got bullish in the stock market was because we took out prior resistance. So this is the point, essentially, where once again I became bullish in the stock market. Now, as you probably remember, when I was in Iran in the spring of this year, I was warning of a pullback or correction in the stock market here, which indeed did play out as we had expected, pulled back to the 21 weekly moving average here. Now, I should also mention that both in March and in April of this year, I mentioned one specific target for the S&P to reach. Let me play for you the clip from my members video. We'll come back.
Looking for a move eventually to the levels I mentioned. The yellow line is the rule of 7 projection that I mentioned, 5337. The brown line for me is another key target I have, 5403. And that's based on the 2618 extension.
I'm still looking for one more push higher into that region. 5337, the rule of 7 projection, and 5400 in the next several months.
All right, guys, thank you very much for watching that. As you heard in the member video, my key target, really from the spring of this year, was at 5400, which, by the way, we reached. Now, I realize we've gone slightly above that level. So this is the point where I got bearish in the stock market here, just near 5400 here. So the fact is, guys, putting everything into context, it doesn't at all bother me that the market has gone slightly above the level at which point I got bearish and I sold the majority of my stock positions. And the reason is that I've been bullish and I've been in the stock market, riding the bull market wave to the upside, pretty much from 2023 to this point here, and then from here to here. Okay, so for most of the last 15 months, I've been bullish in the stock market, and we've made significant gains. Now, I'm not saying I was right every time. I was not. But again, no analyst on the planet can be right every single time. It's just impossible. But the question you're probably wondering is, okay, fine. But is there a chance, is there a probability the market could potentially rally higher to new all-time highs, perhaps to 5,800, 5,900, maybe into 6,000? So I want to try and address that point, that question. So is the market, essentially, the question becomes, is the market likely to form instead a top here, or is it instead going to rally higher to new all-time highs in the next few months, in the next several months? So let's have a look at these two charts, the white chart and the yellow chart underneath. And I want to explain the significance of these two charts, especially as they are important for the next few months. What essentially you're seeing here is the chart of the seasonality of the VIX, the volatility index. By the way, in case you're not familiar with the VIX, this is the chart essentially of the VIX, VIX, the volatility index, also called the fear index, the uncertainty index. So essentially, you'll see this index going up, usually when there's a lot of fear and uncertainty in the market. Notice, by the way, that the VIX has just recently been rising in mid-July. And I'll explain to you why that's important. So let's go to this chart here again, the chart of the seasonality of the VIX. So the first chart I want to show you here is this white chart above. And what you're seeing here is the seasonality of the VIX, essentially how the VIX, the volatility index, behaves at different periods of the year. So what you'll notice, by the way, this chart is courtesy of Jason Geppert of Sentiment Trader. And according to this data, typically the VIX tends to bottom out in mid-July. As you can see here, again, seasonality says that the VIX usually bottoms out in mid-July and then pretty much goes up all the way to October, about the first part of October. So that's the seasonal pattern of the VIX, of the volatility index, usually around this part of the year. So we're now in mid-July. So based on seasonality, it is likely, and we've already seen from that chart, volatility begins to rise from mid-July to October. In case you're wondering, okay, well, so what? What does it matter? As I'm sure you know, a rising VIX, a rising volatility is a negative factor for the stock market, because as volatility increases, the stock market usually does the opposite, does the inverse. The market usually goes down when the VIX goes up. When fear and uncertainty rises, the markets usually decline. So remember, as I'm sure you know, a rising VIX, a rising volatility puts downward pressure on the stock market. So as we can see here, again, seasonally, the VIX usually rises, again, bottoms out and goes up from mid-July all the way to October. Okay, now here's the second chart I want to show you here. The difference is, this is what happens to the VIX in presidential election years in the US. So during presidential election years, a different kind of pattern emerges. Not that different, but just a slight variation, which is that in presidential election years, what usually happens is the VIX tends to bottom, not in July, but in August, and then begins to rise from the third week of August, about mid-August, to 1 week before the election, to about the end of October. So it could be that perhaps we might follow this pattern, given the fact that this year, 2024, happens to be a presidential election year in the US. However, guys, that does not mean we should ignore this one either. So I'm actually watching both. Remember that typically, the majority of the time, volatility begins to rise from mid-July all the way to October. Sometimes, in presidential election years, volatility begins to bottom out and rise from August to October. Okay? That's all that means. But I think we should remember that we are now, it doesn't matter if it's July or August, we are now in the right seasonal window about this time of year, between July and August, when volatility begins to rise and go up, which means the stock market might do the exact opposite and go down. And as you can see here, we've already seen this pattern play out. Let me go back to that chart. We can see already the VIX has been rising. So the VIX has already spiked higher, okay? And we can see the exact opposite has happened in the stock market. The stock market has dropped, as we can see there. So again, volatility going up, market going down. The bottom line is this. What we must not assume is that just because we're in a presidential election year, that therefore July is safe, and therefore everything is going to be okay until August. No, that is not the case. What we're seeing here right now is that we're in a window of time. Again, whether it's July or if it's August, doesn't really matter. We're in the right window of time when we could see rising volatility that could last all the way to October, either middle of October or the beginning of October or to the end of October, just before the election. All right, guys. So the bottom line is we need to be prepared for increasing volatility, increasing uncertainty and fear in the market. And that means it's probable and possible that the VIX volatility could continue to rise in the next several weeks and months. And if that's the case, and guys, remember, even if the VIX does not continue to rise this month, so even if, for example, we don't see the VIX here continue to rise in July, that means next month in August, we could very likely see an increasing volatility, increasing VIX, and that means a major decline in the stock market. Okay, so if it doesn't happen this month in July, which I think actually could still happen, but if it doesn't happen in July, then that just means we'll have to wait till August for it to occur, rising volatility and indeed a major decline in the stock market. I should say that based on what I'm seeing on the chart right now, we're already seeing the beginning signs of a potential decline. The question is, can the stock market now break support? And by the way, that's the one thing I'm waiting for. Make sure you go ahead and watch the members video because I mentioned key targets and support levels. So what I'm waiting for is for the S&P to break support and to show to us a high probability of a top. And as I mentioned in the member video, and I've said this many times, until the market breaks support, we don't yet have confirmation of a top. So the stock market needs to break support levels, key level support, before we can have a high probability of a top in the market. So again, I've covered this in detail in the member videos. So let me show you the final important chart. What I'm showing you here is the S&P. So what we're seeing here on the left is a chart of the S&P large caps. On the right is RSP, the equal weighted S&P. So essentially the key difference, as I'm sure you know, is whereas the S&P is weighted towards big major companies like Apple, Microsoft, Facebook, Google, and so on, RSP, the equal weighted index, again, the weight is distributed evenly amongst all the stocks in the S&P. And that's why this particular chart over here, RSP, can be a good leading indicator for the stock market. By the way, in the member video, I mentioned another important leading indicator, so make sure you go ahead and check that out. But in any case, let's compare these two. Why are these two charts now important? What I want you to pay attention to are the key levels of resistance on both S&P, the large caps, which is at 5670, approximately 5670. And on RSP, that level happens to be at 172.38. In other words, the July highs. So essentially, what we're looking at here, the blue line, represents the July high for the S&P at 5669, 5670, and for RSP, the equal weighted S&P at 172.38. So what does this mean? It means this, that If the S&P, if the stock market wants to prove to us and persuade us that it wants to continue the uptrend, wants to continue the bull market to much higher levels like 5,800 or 5,850. Personally, I don't think the stock market is going to go to 6,000. I think it's unlikely or less likely. It's not impossible, but I think it's less likely for the S&P to move straight to 6,000 at some point between now and October because of the increasing signs of volatility we might see in the next few months. So here's the point. If the stock market, if the S&P wants to show to us and prove to us that it wants to go to, let's say, 5,800 or 5,850, it must break out above the July high at 5,670 with confirmation by RSP. In other words, both of these charts need to break above their July highs before we can have a high probability that the S&P wants to go to those higher levels, like 5,800 or 5,850, thereabouts. Okay, so that's the key point to remember. By the way, I should mention one important thing here, that even if the S&P took out its July high, and even if RSP confirmed this by breaking above its July high at this level, it does not mean the stock market, the S&P, will certainly or definitely go to those higher levels, like 5,800 or 5,850. It's only a probability if, again, I stress, if both these charts broke out above the July highs. So again, we should remember we're dealing with probabilities here, not certainties, nothing definite. Okay, all I'm saying is that if the stock market wants to show to us and persuade us that it wants to continue to rally the bull market to those upper levels like 5,800 or 5,850, then both of these charts need to break out above 5,670 on the S&P and 172.38, the July high here on RSP. If both these levels break and if price closes on both these charts above those key levels of resistance, then the odds increase for a potential continuation of the rally, perhaps to August, for those upper levels like 5,800 or 5,850 on the S&P. Now let me say this, that even though I say that, personally I'm doubtful. Again, on a gut feeling basis, my personal gut feeling is that the market is unlikely to be heading straight to those upper targets, upper levels like 5,800 or 5,850 or thereabouts. Because as I mentioned, we are right now in a seasonal window of time when volatility could actually begin to increase, whether from July, which is about now, all the way to October, or from August to October. So I think the period of window of time is just too short for the stock market to go significantly higher to 5,800 to 5,850. Now, I could be wrong about that. Maybe I'm wrong about that. Doesn't matter. The fact is, though, I'm going with the probabilities. The probabilities are showing that we could see increasing volatility, especially as we get close to September and October. As we know, September, October happen to be the most volatile periods of the year. I've also mentioned in previous videos other important data that's showing increasing risks for the stock market in the next several weeks and months. So personally, for me, on a gut feeling basis and based on what I'm seeing on the charts and other important data, personally, I think there's more risk and more downside ahead in the stock market, especially since the market here took out that trend line resistance, took out that resistance and then dropped back below it. Usually false breaks like this can be bearish. Of course, the market could bounce. Maybe we might see a bounce at some point this week. The fact is, though, again, on a gut feeling basis and based on what I'm seeing on the charts and other important data, my personal view is that the markets are reaching a point where we could see a significant decline. I think that's much more likely in the next several weeks and months leading to September and October. I think we could see more downside risk, again, more volatility, and also potentially for lower levels on the S&P. So again, my gut feeling tells me that we're going lower, not significantly higher to those levels that I mentioned previously in this video. And I do think the odds are increasing for some kind of a blow off top in the next few weeks and months. But again, make sure you go ahead and watch the member video because I mentioned key support levels that need to break on the stock market before we can have a high probability of a top. And also in the member video, I mentioned my downside targets as well as other key targets for the stock market as well. Guys, thank you very much indeed for watching this video. I know I don't say it often in these videos, but if you got something from this video and if you liked it, please give it a like. And also please subscribe for future video updates. I don't usually say this in my videos, but please, if you can, subscribe and also click the bell icon for notifications for future video updates as well. Thank you very much indeed. I look forward to seeing the next video update. Cheers. Bye for now.